Hello, and welcome to this webinar on Preventing Fraud Makes Good Business Sense. My name is Alan Bryce, and I'm the Business Fraud Campaign Manager at the Fraud Advisory Panel and the chair for today's webinar. This webinar is presented as part of our national campaign called Love Business, Hate Fraud, to raise awareness of fraud and cybercrime against UK businesses, especially smaller ones. We encourage you to share this webinar and any of our other Love Business, Hate Fraud resources with your colleagues. If you are joining us live, we encourage you to ask questions throughout the webinar. Questions can be submitted at any time using the Q&A box that's on the screen. We will strive to answer as many of these as we can towards the end of the session. So we have three excellent speakers on our panel today. Neil Sharpley, Chair of the Home Office and Ministry of Justice Policy Units at the Federation of Small Businesses. Neil has been self-employed throughout his working career, owning businesses in recording, publishing, wholesale, mail order, manufacturing, and retail, all connected with the music industry. We have Paul Mason, the Managing Director of Unity Bathrooms Limited, who has very kindly agreed to share his experience of becoming a victim of fraud committed against his business and the impact this has had. And finally, we'll have Aaron Chown, founder of Tenant Law. This is a law firm which specializes in providing advice to SMEs on fraud and financial compliance across the UK and overseas. Aaron is also a trustee here at the Fraud Advisory Panel. So, first of all, to explain the nature and extent of fraud affecting small businesses from the perspective of the Federation of Small Businesses. Neil, over to you.
Thank you very much. I hope you can all hear me, and good evening to everyone who's on the call. It's my job really to set the scene tonight. So firstly, I'd like to thank the panel for inviting the Federation to participate in this important discussion. It's an unwelcome subject, and I would imagine that most small businesses have enough on their plates with bounce back loans, with COVID, with national insurance increases, with wage inflation, to be overkeen on diverting their attention to something which doesn't appear to be profitable and seems to be just another project fear. It's, however, obviously important that every SME is aware of the risks to their business from fraud, especially where those risks can, as I think Alan will explain, be an existential threat. And I hope that this event will help you to understand the increasing chance of SMEs being a victim of fraud or similar business crime, and might encourage you to take some basic steps to assess your risk and take affordable steps to address that risk. So an overview then. Brief summary. The four main areas of fraud that impact on business are internet originated or enabled fraud, telephone originated fraud, retail fraud, especially in relation to e-commerce, and employer or supplier fraud. And I'll just touch on each of those a little bit more detail, but I hope that we'll have Q&A later when you can ask specific questions about things that we don't touch upon at this stage. So first of all, internet related fraud. This is the biggie that everyone hears about all the time. We all know that cybercrime is increasing exponentially year on year. In fact, the 2022 annual fraud report from UK Finance reported 195,000 incidents of push payment fraud, valued at over £583 million, and that was up from £420 million in 2020, a massive increase year on year. And out of the total of all the frauds and losses reported, 77 million affected non-personal or business transactions. And so the worry for business is not small. Everyone's aware that phishing, and I assume everyone knows what phishing is the largest threat, followed by ransomware. And so the main threat is human enabled, not tech enabled. And we could spend many hours talking about the cyber threats. But I think at this point, before we get into the detail, I'll simply say that there are excellent materials that the National Cyber Security Centre has got. If you don't know about them, every region has a regional cyber resilience centre, and they also have excellent materials. Both of those, the NCSC and the CRCs, have emails that can inform you on a regular basis about the latest scams, the latest threats, and point you to things that your business can do to help you. And they have toolkits online, short videos, and a whole wealth of materials that can help you. So look out for those. The police in your area will have a protect and prevent officer who may be prepared to visit you and explain what the risks are to you face to face. So use all of those resources. Hopefully everyone knows that they should not click on unfamiliar links. But as a consequence of that, scammers have adapted. And now what they're doing is putting forward what look like friendly 0800 helplines in some of their emails. So they're trying to encourage you to go back to the steam method of talking to them on the telephone so that they can then manipulate you. Our old friend, the telephone fraud, I'm afraid hasn't gone away. I'm sure many of you will have experienced the people from the Indian subcontinent who pretend to be fake Microsoft support departments. And those calls are fairly common, and people impersonating police, the tax authorities, the NHS, and a whole host of other organisations, I'm afraid, are still very, very common. And so we mustn't forget about these, what I suppose you could almost call traditional frauds, because they're still there in the background. The more recent version of this type of telephone fraud involves mobile phones, involving fake text messages, fake app messages, including WhatsApp messaging, and other social media. For example, criminals have been more recently on WhatsApp pretending to be a relative who's lost their telephone, sending a message saying they urgently need funds, and because it comes to your WhatsApp account, it's, for some people, a more credible message than it might be by other means. So you have to watch out for the mobile version as well as the telephone call to you. As far as retail fraud concerned, there's a whole host of different ways in which that can manifest itself. And I'm not going to go into all of those. But for example, there's something called the daisy chain fraud I was being told about by one of the police sources the other day, where criminals physically steal items from a shop and then take them back to another store in the same, another branch of the same store to get credit. And by repeatedly doing this, they eventually get a full cash refund for the item that they've stolen. And so this is, I suppose you would call it shop theft plus, really. Online sales suffer an enormous variety of frauds, and I'll just touch on these. You have identity theft purchases, of course. You have false address frauds. You have false claims that goods were not received or were faulty. You have a failure to return goods after cancellation of orders or when allegedly faulty. And the returns of the wrong and dummy goods in some cases. People put items of the same weight or dimensions into a package, and they are exploiting people's return systems, because when those items are scanned in, the business thinks they've been returned, but in fact, when you open them, you find they're not the goods that you were intended to receive at all. And the EU retailers report, the EU reports that retailers in the EU lost 3.2% of their revenue to e-commerce payment fraud in 2021. And unfortunately, fraudulent new bank sign-ups are rising significantly, which of course makes the identity and due diligence checks by retailers even more difficult. So employer and supplier fraud, perhaps slightly more simple, again, a traditional fraud, if you like. Fraud by current or former employees is distressingly common. Employers can spot loopholes in the sales payment, employees can spot loopholes in their employers' sales, payment or delivery systems, and they can exploit them. Employers are often, unfortunately, too trusting or relaxed with their current employees and with their access to all of the systems, and often fail to block or change access rights or passwords at all, or quickly enough after employees leave. And that obviously leaves an opportunity for someone who has malign intent. Supplier fraud is usually affected by way of identity theft by creating false invoices or diverting payments for genuine invoices. Criminals who emulate genuine suppliers, it's less common, but it's becoming better known. And there are some things that you can do within your own business to try and defeat that particular methodology by having checks within your account system that enable you to verify whether or not the person who's contacting you is in fact genuine. So the final area really is in terms of risk assessment and solutions. I expect you're all thoroughly depressed by now, hearing all of these different ways in which you can be defrauded, but there are some obvious and in many cases low cost steps that you can take to try and mitigate the risks that I've just described. So all of today's speakers will, I think, be able to talk about specific steps that can be taken in each of the 4 risk areas. I'm just going to give you a brief overview of the overarching considerations that affect them all. So first of all, knowledge, absolutely key. What you and your team do not know, you will not be able to guard against. It's obvious, but people don't tend to think about it. The knowledge is definitely power in these areas. So sign up to your regional cyber resilience center emails, your NCSC emails, any other source, your local business, regional crime partnership or forum. All of these are excellent sources of things that are going on nationally, regionally, or in your area. So intelligence is the key word. Join your local shop watch or crime watch schemes and get information from their WhatsApp group or whatever they're operating in your area. And of course, once you have that key information, adjust your working practices or security to take account of what you learn. So secondly, share everything that you've learned with all of your team so that security and resilience becomes everyone's responsibility. You're only as resilient as the weakest team member. So make sure you do that. Frequent short updates are always better than having long, rather tedious and forgettable training sessions less frequently. So think about having perhaps a fraud day or a cyber day or even a lunch with sandwiches and put these points and the intelligence over to your team on a regular basis. Thirdly, simply assess where you see the risks are within your business. Small changes of practice in some cases can make a big difference. So assess, for instance, whether all your team members really need to have access to all of your sensitive information. Do they all need to be connected to parts of your computer system? Or is it only those who work with that part of the system who need to do that? So there's good video material online which your team can access. And as I say, you're only as resilient as the weakest member of your team. So make sure that none of them are weak. As far as the essential risks are concerned, you've really got to look at all of your systems, both in practical terms and in technical terms. There are some simple things that you can do in terms of physical security, making sure that doors are locked, making sure that windows are locked, making sure that people don't have access to the premises without any sort of security screening. They're obvious things which the police will talk about endlessly, but a lot of people are very casual about them. And finally, do not assume that your business will not be a target. Everyone is now a target. Malware and cold callers just don't discriminate or select. They try everybody until they find someone who is a weak link or a gullible victim. So don't assume that you're not going to be targeted. The crawlers on the internet will just crawl around until they find a weak link and get in. They might target you, for instance, to get to someone else. They might specifically target you because they know that you deal with a larger supplier who has valuable information or perhaps IT information or R&D information that they want to get at. And so you might be a target simply as a conduit, not as a particular target in yourself. So I think that supply chain integrity, which the government are considering at the moment in terms of what they might require businesses to have in terms of the contracts for supply within the supply chain. The DCMS are actively considering this at the moment. I think this will be something we need to look at, and it will possibly affect all businesses in some way if some of the suggestions they're making at the moment come to pass. So I think that's probably enough for me of an overview at the moment. If you've got any questions about anything I've said so far, I'm sure we can come to those in the Q&A. But thank you very much for listening so far, and over to you, Paul.
First of all, thanks. A big thank you for that overview of the extent of the problem that we are now facing in relation to the fraud and cybercrime threat. It's quite staggering, some of those increases in the amount of fraud that's going on that you referred to there, and particularly looking at the figures around push payment fraud and the big leap forward there. The point I definitely took back from your comments there, among many, was don't assume you're not going to be defrauded. A message I very much that very much resonated with myself. So that's the overview. What does this mean to an actual individual business? Now I'm just to pass over to Paul now to talk about the fraud that affected his business, and and the impact it had across not just financially, but other aspects of the way in which the business operates. So, Paul, over to you.
Hey everyone. So I wanted to give you a bit of an insight in what happened in our business with a former finance director, and I'm hoping today's discussion will avoid it happening to anyone else. Myself and Steve, our chairman, are salespeople at heart. We own and run the business in the southwest of England, but we didn't really want to be dealing the financial side. We weren't qualified to deal with the financial side. So we went to an accountancy agency to get the correct person. We got Michael from a local agency that specialized in qualified accountants. Now, this is the first tip that I would give to everyone. Even if you go to a agency that specializes in certain sectors, always get your own recommendations, but always check the qualifications. Unfortunately, the agency that we paid thousands of pounds to didn't do those checks before they recommended Michael to us. So Michael started off very well. Everyone liked him. Business was going good. During the 6 years, there was always small irregularities, which in hindsight were red flags. What we came to realize that Michael wasn't a clever person. However, he was clever at one thing, and he was a master of manipulation. So I'll give you an example. If there was ever meetings between myself and Steve or suppliers that questioned Michael in any way, he would always remember information from previous meetings or previous discussions, and normally within a week or two, he would get you a gift or he would do something for you to think, what a nice guy he is. So there was money in the bank, business was on the up and up, we were turning over about £6 million a year. We were hitting credit limits frequently with suppliers because suppliers just won't keep a bottomless pit of credit for you. So every time we hit a credit limit, we used to pay it. In August 2016, Michael had his first 2 weeks holiday ever whilst he was with the business. Normally, you would only take 1 week's holiday. Subsequently, we've now been advised that any financial director or CFO should be made to take 2 weeks holiday at least every 12 to 18 months. Because if there is any irregularities or there is any issues, they will normally come out within those 2 weeks. So this is where the nightmare began. On August the 16th, 2016, we opened up a can of worms, to say the least. We realized that payments would go into Michael's bank account and not to supplier bank accounts. So you may ask, how did this happen? So we would pay a supplier £15,000, £20,000, a particular supplier, in a month. However, we always used to have discrepancies with invoices where sometimes prices would come in wrong. So Michael would normally say, I'm going to pay the supplier, let's say 15 grand, but I'm going to put £5,000 into dispute. A couple of days later then, Michael then would pay the supplier the money that was in dispute. All the references and everything all matched. However, we found out afterwards that Michael would go into the system and actually change the bank account details to his own bank account. So a plan was put into place when we discovered this when Michael was away, but it took 5 weeks of working with him, knowing what he had done, but we had to gather all the information, passwords, all of the different things that only he was looking after. And this is another tip that I would give to everyone. Do not allow just 1 or 2 people in the business to have all the passwords, to have all the logins. So we approached Michael on the last day of September. We called him in for a meeting. He replied that he was disgusted with the allegations after a 90-minute meeting and was suspended with full pay. In October, Michael resigned and claimed that we owed him thousands of pounds, which is obviously a lie. We reported the matter to the police, but what you don't realise, you don't just walk into a police station and report fraud. You've got to do it all online. There's a form you've got to fill out. You get an email back then to say that somebody will be in touch in the next 60 days. On day 58, we had a call of a lady and said, we'd like to plan a meeting, but that wasn't until 6 weeks after, which obviously was coming extremely frustrating. During the police investigation, we also had to contend with the pandemic, so this dragged things out even longer. We also discovered that Michael had defrauded companies before us and also 3 companies after us, even during the police investigation. It took 5.5 years to get Michael to court. It took, obviously, the pandemic obviously prolonged it, but Michael was also the master in delaying things. He continued to plead guilty. He opted for trial, and on the day the trial was supposed to begin, he pleaded guilty. On the 22nd of April this year, Michael was found guilty of defrauding multiple companies as well as 2 banks to obtain mortgages by deception, and was sentenced to 10.5 years in prison. Unfortunately, back in 2019, we had to put the company into a pre-pack administration. So unfortunately, we won't get a penny back, but our creditors will when the proceeds of crime go through. So after 3 years, we are still dealing with, so after 3 years of putting a company into a pre-pack administration, we are still dealing with the aftermath. We still can't get merchant services with credit card companies. Suppliers will only give us low credit limits. Even recently, we had a housing contract pull out at the last minute because they'd done a credit check on us. And then they seen then that myself and Steve were still directors of a company that was in liquidation. Unfortunately, that won't be released until the proceeds of crime are going to go through, which could be another 12 months. So as we've been told many times, if you ever figure out you've got a narcissist in your business or in your life, get them out as soon as possible, as they will not stop until they get what they wanted. Thank you very much for listening to our story, and back over to you, Alan.
Thanks very much, Paul. There, before we move on, I think I'm correct in saying that in relation to the case that Paul's talking about, as I understand that one of the business owners, sadly, of one of the other businesses that was defrauded by this individual, actually subsequently went on to commit suicide. So really, I think it just goes to show, as I was listening to the case there that Paul was talking about, and how it affects not just his company, but obviously the financial impact directly, but that longer term financial impact as well for his organization, and clearly affected he himself and his business partner and those who work for his business. Fraud has an impact far beyond the financial. That really came through for me. I'd like to just thank Paul there, and again, we will have an opportunity to do questions at the end. And also, I would say that in terms of all of the speakers here, but Paul has made the specific point, is if you do want to get in touch to talk about this in a bit more detail to any of those speakers, but particularly Paul made the point to us, is do please contact the Fraud Advisory Panel in the first instance. And if that's possible, we'll arrange that for you, those contact details. So I'd like to now move on to our third speaker. Now we've heard the overview of what's happening from Neil in terms of the wider impact on businesses. We've also heard the impact it has on an individual business and those people who are owners and involved with that business directly. And Aaron's going to talk now about his experience in relation to running a business that it's clients who themselves are the victims of these fraudsters. So Aaron, over to you.
Yes, thanks, Alan. Appreciate the handover. Evening, everyone. Hope you're all well. Thanks for joining the webinar this evening. I thought it was incredibly brave and really valuable for Paul to give his insight. I'm really sorry to hear what happened, but sadly, the events that happened to Paul's business, as many may well know on this webinar, are not uncommon. There is far too many employee-type frauds that have occurred in SMEs, and sadly, it's continuing to happen. I think Neil gave some really good insight about the landscape of fraud, and I just want to try and add some colour to it. As per the introduction, so I'm a lawyer. I deal with representing businesses, individuals who are dealing with the impact of dishonesty and fraud and trying to recover their money or their assets. And I thought it'd be useful just to go through in my 15 minutes or so a few of the typical cases and some case examples we've dealt with of SMEs and what's happened to them, and then also go through the impact on really the owners of businesses and how dramatic that can be. And it's not just about the financial loss, but there's a whole range of things that happen to business owners and the businesses if they are subject to fraud, especially if it's an internal fraud. And then to try and end up with some tips and best practice tips on how to combat fraud, maybe re-emphasizing some of the really sensible and good points Neil made, as well as those made by Paul. So if I can just go to the next slide, please. Probably a relic of my youth that I seem to name case studies as if I was doing episodes for the old series Friends. So the first one is the one with the franking machine and the postal savings. So this is about a jewelry manufacturer, a company turning over a little over £10 million. They would spend £250,000 a year on their franking machine costs to send out their jewelry to customers or to B2B, to retailers. And one day they were approached on an introduction by a known supplier to an individual who comes along and says, I can save you a lot of money on your franking machine costs. What I can do is I can get you to be part of the consortium that we run for Royal Mail. And as a part of the consortium, we'll save you money. And in fact, you'll get some money back on your monthly spend that you commit to. This all sounded very good to the managing director. It all sounded very plausible. They were given a snazzy presentation, and so it went on. Ultimately, the managing director of the company, in hindsight, he knows he didn't quite understand what was happening in terms of how this scheme worked, but ultimately he thought it sounded like he could save the company money. He's a busy individual, and off it went. And so he signed onto these agreements, and this included, for some reason, having to buy some photocopiers as part of this agreement. Ultimately, what the managing director signed for what was a very well-run business was some hire purchase agreement with a bank. And what was actually happening in the background was this individual who's shown up trying to sell savings and these franking machines and postal equipment had caused the directors sign into finance agreements to buy equipment at really inflated prices, like 1,000 times more than the cost of the equipment. The fraudster received from the finance company, the bank, the HP finance money, and every quarter will send a bit of that money back to the company to say, here's your rebate. And it was essentially like a Ponzi scheme. We'd committed to a HP finance agreement, and the money was paid out to the finance to this fraudster. These rebates kept coming for a year, and everything felt pretty good. The MD didn't really think about the ongoing monthly costs they were paying to on HP finance. And then suddenly the rebates stopped, and those rebates were covering the finance costs and were giving them a little bit extra. And suddenly they were left holding these 3 or 4 finance agreements, and all of those finance agreements amounted over to £1 million. They had been defrauded, they'd been misrepresented to, and there was a conspiracy between suppliers and the salesperson. And ultimately, they suffered quite a big loss. They got some of the money back, but not all of it. And it became a pretty long-winded affair, resulting in a 14-day trial in the High Court. The big lesson that came out of this case was, apart from understanding what you're signing into, a lot of time I see supplier frauds that are not for the core area of the business. This MD knew the jewelry business inside and out, but when it came to photocopying franking machines, that was something quite different. He didn't know it, didn't understand it, but yet it sounded good. And so they bought in. So the first lesson there is, if you're dealing with purchasing of goods outside of your typical area and core business knowledge, get some experts, get people who know that area, get some advice, and be careful before you commit. The second story is about the managing director of a well-known architect's practice. And sadly, this is a story very similar to the one Paul has suffered and you've heard about earlier. It's a story of giving too much control to the head of HR and operations. It was the right-hand person to the MD, and that right-hand person over years was giving so much authority. They were given PIN numbers for credit cards and the debit cards for the business. They were on the online banking. They dealt with all the finance. And over years, this employee managed to gain that control and trust. And it made, in the eyes of the MD, their job a lot easier. What took place after that was a series of years of the business doing reasonably well, but the MD not having enough time to scrutinize their finances, but they always were making a healthy profit, so no one really questioned anything. They changed accountants after about 4 years of what had been going on. And an accountant comes along and says, you know what, there's something really odd here. You've got 100 grand spent on training this year, and it's been increasing every year. Can you just talk to me about that? And this meeting took place with the MD, the head of HR and operations also present, and the accountant. The head of HR and operations fainted in the meeting. all so-called fainted and were taken away. And later it was discovered with some digging that that head of HR and operations had been setting up what they call false nominals on the account system, set up a fake place to pull costs for training, but really was diverting money to her own personal account. And there'd been no scrutiny of this. A bookkeeper had been sent in by the accountants, but they hadn't picked up on it. So there were a range of issues. The SME here, the architect practice, didn't have any insurance or fidelity insurance, anything in place to protect them. So they tried, all they could do was go and try and recover the money. They got a freezing injunction, they froze the assets of this individual, they got disclosure orders for the bank accounts of the employees. And this employee had been living the life of Riley. And what we found, to the horror of the MD, was about 30 days away, there was a holiday booking where this employee had booked a holiday for her family and her friends for £42,000 to the Caribbean. It was within 30 days, so there was no refund available, no option to transfer the ticket to anybody else. They just had to stop the holiday and forfeit the money. But what they also realized is this money had all been spent on gifts and family excursions, extravagant excursions, and she'd been living the life of Riley. And it's very similar to Paul's case. The scrutiny wasn't there. It was a lovely employee, long-standing employee. It was all the telltale signs, and it just shows this happens time and time again. And then you get other types of employee fraud. You get the ones where the, a senior employee knows the business well, tries to divert the business to their own business and really springboard up their own new business and divert business opportunities and act against their interests for the employer and breach of duties of fidelity, conflict of interest. In this case, it was about something called initial accommodation. It's where there are government central contracts to supply housing and accommodation to asylum seekers. And this company would provide that contract to provide that supply of accommodation to a single contract provider. That single contract provider was approached by a rogue employee in the business saying, look, we can give another opportunity. Here's an opportunity where we could provide a service for a lower cost and sought to divert the business. And that's just a really common example of employees breaching restrictions in their contracts or trying to divert business to family, friends, or for themselves for a better good. Of course, there's lots of other examples. Many talked about, like, for example, Neil mentioned a lot of the cybercrime type examples, the breach of confidence, stealing confidential information on pricing. But also there's examples of where one SME is buying another SME out, and there's inflation of their sales and inflation of the customer book, and there's misleading of that to get a better price. And ultimately, when you get in and you bought the company, you've been misled, no matter how good the due diligence was. Could I go to the next slide, please? So what do I see when I get the impact of this? So I remember at the evening of dealing with one employee fraud case, an FD phoned me who was trying to, at the end of his day at about 6 o'clock, 6:30, similar time to this, build an Excel spreadsheet trying to explain where certain payments had gone in a sizable employee fraud that had occurred to them. And he's just started chatting, and this slide was built out of that discussion. He said, look, until this happened, you never really think about what the impact is of an employee fraud or a fraud on a business, or a business of the kind of SME status. He said, it's not just the financial. He said, look, the morale in the business is absolutely shot. How could one of our own do this to us? Productivity has really reduced. People just have lost interest. There's just this nervousness that everybody's not trusted anymore, and people are just taking them a lot more time to show they're doing their job properly and applying processes, and we're just not getting productivity. Because we've lost a lot of money and we're not sure we're going to get it back. People are talking about this, and the problem is it's going to get out in the marketplace that we can't control our own funds. Our reputation is going to be really shot and ruined, because I can't believe how much management time this is taking up. I'm here at 6:30 at night talking to a lawyer, and all due respect to me, he really didn't want to speak to me much. It's a common trait, I think, with clients dealing with our area of work. But he's saying, look, the amount of time I'd rather be with my family. That's where my day ends now. I should be with my family, but I'm spending hours trying to give you detail for evidence to run a case. He says, we're having to retrain members of staff to step in for the senior employee who is now, we found, has been defrauding us. They've reported it to the police, so they've got to give up their time for witness statements and ongoing work with the police. And of course, when it goes to the police, it goes into the public domain. In some cases, there is a regulatory interest, health and safety executive, for example, if any of the fraud is impacted on that. And in this case, there was the health and safety executive issue. He talked about business continuity. Take a key employee or a key supplier out of the business. How do you replace them and how do you keep business continuity? And he said business continuity was having a real impact. And he said just the time it takes to deal with a review of events. These were real time-consuming factors. And it wasn't until that conversation, and this is probably a good 10 years ago now, where I was sitting there and I was thinking, you know, as an advisor, you don't get to live and breathe this awful event as much as those who are in it. And he said, you need to take this message to anybody. Prevention is better than the cure. We know that. We know preventing fraud and being on the watch for fraud is important. And he said, it's not just the money. It's the impact of all these things on the individuals, the owners, and everyone in the business. Next slide, please. So what do we do about best practice? What is best practice? Well, we've had some really good points. You know, we've talked about knowledge, and knowledge is important. We have to stand back and think, fraud is not black and white. There are various shades of grey. Different people interpret their conduct in a different way. Some people might see their actions as sharp practice. Some might say that sharp practice is dishonest. The problem is we as business owners and business leaders will always think that everybody's moral compass is pointing due north in our business. They're always going to do the right thing. But sometimes people's circumstances cause them to do the wrong thing, and good people can do bad things. They can be under pressure. Just look at the circumstances now we are with the cost of living crisis, and you know the winter is going to be harsh for some, and is the pressure going to cause them to bend rules in the workplace just to keep them above the water level? So sometimes people will start to do the right thing for them rather than the right thing, and we have to be accepting that there is always a fraud risk within our business. And that same risk is on suppliers. They're trying to keep profit margins up to pay their staff to keep their business functional. So are they going to bend rules on what they produce for you as a customer? Are they going to bend rules on what they charge you for? So we have to be quite open-minded. So how do we combat fraud? Well, I'm a huge advocate for having everyone in a business talk about fraud in team meetings once every 6 months and or at least a year. And if the business is brave enough, I would say, talk about how would fraud be committed against your business, or how would they commit fraud against your own business, knowing how they do their role. Just ask them what are the weaknesses. But by talking about fraud, you do a few things. First of all, you get to educate people that it's not black and white. You can educate people about what it looks like, colloquially, what it smells like, what it feels like, and what are we looking out for. By talking about fraud amongst everybody, you're also setting a deterrent. So you then get to a point that if you do hear about fraud or you stop a fraud, you can internally publicize your actions and people know you're on this. You need to also encourage whistleblowing. I know a lot of things are said about whistleblowing and it's not picked up as well as it should, but there should always be an opportunity both internally and externally for people to report that they think you are the victim of fraud as a business. And then critically, as Paul has evidenced, from the moment you discover fraud or suspect fraud, even if you're hesitant about it, the time you spend, the time you lose from when you discover can be quite vital. Sometimes, that's probably more often with SMEs, sadly, you get this kind of headless chicken moment about who do I speak to? Do I go and contact the police? Do I speak to Action Fraud? Do I speak to accountants? Do I speak to a lawyer? Do I speak to other business people I know? We're not sure what happened. And in that time, valuable evidence can be destroyed and valuable time can be lost to someone trying to move the money if you're going to go after them. So think about fraud and think, if it's cyber and we get a cyber attack or a phishing email and we click on a link on malware, we need to know what we're going to do before the event happens. If we think we've got an employee fraud, we know what we're going to do before it happens. And that just gives you a sense of control and a sense of just guidance and process. As has been mentioned, there is lots of good practice out there. We have guides on the Fraud Advisory Panel website and the Love Business Hate Fraud campaign. There are guides on various other websites about how to put in basic counter-fraud controls and processes. Regulated businesses talk about control frameworks. You don't have to go to big, super vast control processes and schemes. It's just about clear segregation of duties and checks and balances and making sure they're checked. It's not mistrust to check somebody's work. It's not mistrust to check that they're doing what they should to protect your business. And I can tell you with every case I've referred to earlier, the amount they had to spend or they felt they needed to spend to try and recover would have been completely minuscule in comparison if they just invested in prevention. It does myself out of work every time, but you could spend 5% of the cost than you would on a whole case going to trial, and you'll be in a much better position to prevent fraud. And you may not well have suffered a fraud in the first place. So that's my kind of view and overview of things. Thanks for having a listen to me, and I'm going to hand over back to Alan now. Thank you.
Thanks very much, Aaron. And interesting point I really took from that. I like that idea that the moral compass, we all presume that people's moral compass is pointing due north, and that given all the likely financial pressures that people are on, and that particularly what's likely becoming under the current financial constraints, we just can't make that presumption. We shouldn't have done it before, but certainly can't make that presumption going forward. So I'd just like to very quickly, if the speakers are happy to, I was just going to say, if you had, given your experience and what you've talked about, if you had one top tip, as it were, that people could take away from what they've heard today that you would think would help in terms of that prevention agenda. Now, I'll probably go back to you, Neil, just to start with, because I imagine that there might be others, but I'm very taken with your DAVE acronym, distrust and verify. Anything else around that?
Well, I think it comes back to what I said in opening. I think the two key things are knowledge and training. You have to have the knowledge that you can share with others, and then you have to make sure you train and share. And those things can deal with a lot of the problems that arise. And they don't have to cost a lot to do that. You can acquire the data and the information fairly cheaply from well-recognized sources. And of course, the training you can do informally yourself by sharing that information.
Great, thank you. Paul, I think you've given us a few definite hints in certain areas, but if there was one thing, one lesson you'd take away that would help others not become a victim and face what you faced, what would that be?
I think Neil summed it up a minute ago when he said that everyone's got their own expertise within the business. And I think we fell victim of just allowing a financial person to do that because we didn't want to do it ourselves. But the one thing I would say is just check every aspect of the business, but more so when you see payments going out of the bank account, don't just look at the references on them. Delve into it a bit more to what the bank account and sort codes where the money's supposed to be going to. Because unless you've got the list there right in front of you when you're checking it, you could have 200 different suppliers. You're not going to remember every bank account, but maybe once a month, spot check 10 bank account numbers against the payments that's going out, because I'm guaranteed that people will find some, because even the police turned and said to us, it is absolutely rife white collar fraud at the moment. And when times are getting tougher now with the economy, it's going to come more to the forefront. Great,
thanks, Paul. And finally, Aaron, from yourself.
Yeah, I'm repeating the knowledge point. I mean, fraud and cybercrime is 41% of all crime in the country. I think it's about talking about fraud amongst your employees. It's the training. And don't forget, this isn't just about protecting your business. Individuals are consumers, your employees are consumers, and they are all being targeted for fraud as well. Educating them about fraud for themselves and the business is the best way to deal with this, and that's talking about it more openly.
Great. Thank you. So I'd just like to say, in concluding this webinar, first, a big thanks to our guest speakers, Neil, Paul, and Aaron, and thank you for listening to us this evening. This webinar will be available shortly on demand from our website, www.lovebusinesshatefraud.org.uk, where you also find other useful resources that we are using to help manage the risk of fraud and for you to use within your organization. Before you leave this webinar, can I ask if you could please complete the short survey, which will pop up on the screen in just a moment. There are only 5 questions and should only take about a minute to complete, but will be really invaluable in assisting us in terms of planning similar future webinars. And just a quick reminder for your diary. Our next webinar will be on Tuesday, the 13th of September, this time starting at noon, and it's going to be on the subject of procurement or purchasing fraud. If you're a small or medium-sized business and have always wanted to know more about what for example, due diligence checks, something we've talked about today, but more about what due diligence checks you should be running and those that you're actually doing business with, and that can be in UK or internationally, then I really encourage you to join us on the 13th of September and listen to procurement fraud experts talk us through the simple practical steps that you can take. So thank you and goodbye.